Hello everybody, Jim Malone here from Dallas Trading Floor. Well, you've probably been watching the market as of late, and it is moving up very, very nicely, but it's kind of a strange market in that most of the action has been in the chip sector. Now, if you missed NVIDIA and you missed ARM, there's another stock that has just broken out and is making a move, and I think this is a significant one. It's from a stock that you probably heard of, Advanced Micro Devices, or AMD. Now, typically what I like to do is I like to do a covered call trade when I'm getting into a stock for the first time. It gives you a little bit of backup security rather than just buying the stock by itself. Now, the problem, of course, with doing this is the expense. When you do a covered call, you got to buy 100 shares of the underlying stock. Well, that means that with this trade, if you were to do just a regular covered call on it, well, it would cost you a little bit of money, and that would be, of course, you'd be spending about $20,000 to purchase the underlying shares, and that's kind of expensive. So I have an alternative to that. It's called a poor man's covered call, and the way that works is we replace the shares with another option. So we're using two options to offset the risk, and this might be of interest to you. This is sort of how I'm going to be playing AMD going forward. Now, I already do have a regular covered call trade, but this one may be the one that I substitute for it going forward just because of the efficiency of it. So let me show you this poor man's covered call. Today, Wednesday, AMD broke through resistance, and the resistance really here is about 202. You can see that it came up out of this cup with handle formation. This is a cup and this is the handle. And then it broke above 200. Actually, 202 is sort of where the resistance is. Well, how do I know that? Well, look at all the volume that's coming in. It peaked and then it's pulling back. What this means is that it is probably establishing a range above 200. Now, typically, up until now, since the beginning of January, it's sort of been flatlined. It's sort of been building this base, this handle. And that was about at 160 and then up to maybe about 175. And then it came to the end of the month, went forward, and then it popped above this 202 line. And that what I think here is that we are going to see it probably rest here. So what's happened is it's come up, it's punched through that ceiling, and it does look like it's going higher. Look here, and you can see the relative strength line is moving up, and also the volume, while very high, is trending lower. What this means is that, yes, people are buying every share that they can get, but they can't get enough shares, so they're pushing the price up. So my guess is that we're going to see a floor, essentially, on AMD, at least for the time being, at about 160 on up to the resistance level at 202. So here's what I propose. For this trade, you need to have access to about $3,100, $3,193. And the way this works is you purchase a underlying call, and this is the April 19th call at 160, and then you simultaneously sell a 200 call. So remember the resistance is about 202 and we're above that. So I do expect this 200 call to be the correct one. Now, based on when the slide was made, the 200 call cost $20.95 and the 160 $52.88. So together they're going to give us $31.98. So because remember, when we sell this call, we're going to get $20, and we buy this call, it's going to be $52. So it comes out the difference $31.93. So when we do this, that forms the poor man's covered call. At the end of the trade, the potential for profit is $807. This is if AMD is at $200 at or beyond April 19th. That's when both of these expire. Both of these options expire. We have about a 25% return on equity here, based on this price that for the call pair $31.93, and so our break even is about 191. Now what that means is that it can go down to 191 and we'll still break even. The probability of profit on this one is about 69%. So pretty good on this. Let me show you the payout chart. Currently, this line is where the underlying stock is trading currently. If we continue on this track and we continue flat, you'll see that eventually on April 19th, these two options will expire and the difference will be the profit, and that will be this 807. So this is what we're hoping for. Now, even if the stock were to go down a little bit, let's say it were to go down to 200, if we held this long enough, we would still make 807 at the expiry at April 19th. So this basically gives us some downside protection. Now, this will protect us all the way down to 192.50. So if at any time during this period from March 7th through April 19th, it falls below 192.50, we should probably close our position. If you look in the comments below, you'll see a link that will allow you to take a look at this slide deck in more detail. Also, it'll give you a link to the calculation of the profit on this. So we use a site called Office Profit Calculator. This is totally free, and it gives you an idea of when to get in and get out of the trade. Thanks for taking a look at this. Hope to see you on our regular YouTube on our regular YouTube channel. You can also subscribe to that by taking a look at the link in the comments below. Thanks for watching.